Meet Alex, an aspiring entrepreneur with a brilliant idea. Starting small, they envisioned a future built on passion. The journey of business ownership had just begun, filled with excitement and endless possibilities, requiring crucial decisions about structure. Alex began operating simply, without complex registrations. Their small online craft store quickly found its first customers. This straightforward approach meant focusing entirely on creating and selling, enjoying the freedom of being their own boss from day one. This initial setup is known as a sole proprietorship. It's the simplest business structure, where the individual and the business are legally one and the same entity. No separate legal registration is typically needed to start this venture. One major advantage of a sole proprietorship is its ease of formation. There's minimal paperwork, no expensive filing fees, and you maintain complete control over all business decisions. It's perfect for testing a business idea. Another benefit is the direct flow of profits. All income generated by the business goes directly to the owner. There are no corporate layers or separate tax filings to complicate things at the end of the fiscal year. However, with simplicity comes a significant risk: unlimited personal liability. As a sole proprietor, there's no legal distinction between your personal assets and your business's debts or legal obligations. This can be daunting. Imagine a business lawsuit or a significant business debt. Without a separate legal structure, your personal savings, home, and other assets could be at risk. This lack of protection is a crucial factor to consider. As Alex's craft store grew, so did their concerns. More orders meant more responsibility, potentially more suppliers, and the possibility of unforeseen challenges. The initial simplicity now felt like a growing vulnerability. They started researching ways to protect their hard-earned personal assets from potential business risks. The idea of growing their business safely became a priority. This led them to discover the concept of an LLC. An LLC, or limited liability company, is a popular choice for small business owners seeking both flexibility and protection. It combines aspects of corporations and partnerships, offering a balanced approach to business structure. The primary benefit of forming an LLC is personal liability protection. This means your personal assets, like your home and savings, are generally shielded from business debts and lawsuits. It creates a legal barrier. For Alex, this was a game changer. The thought of their personal life being insulated from business setbacks brought immense peace of mind. It allowed them to take calculated risks without fear of losing everything. Beyond liability protection, an LLC can also project a more professional image. Using LLC in your business name often suggests credibility and seriousness to customers, suppliers, and potential investors, enhancing trust. Forming an LLC involves filing articles of organization with your state's Secretary of State. This is more involved than a sole proprietorship but far simpler than setting up a traditional corporation. It's a structured process. You'll also need to create an operating agreement, which outlines how your LLC will be run. This document defines ownership percentages, member responsibilities, and how disputes will be resolved, crucial for clarity. Now, let's delve into taxes, a critical area for any business owner. For sole proprietors, taxes are relatively straightforward. Business income and expenses are reported directly on your personal tax return. This usually means filling out Schedule C, profit or loss from business, as part of your Form 1040. Your business profit is simply added to your other personal income and taxed at your individual income tax rate. Sole proprietors also pay self-employment taxes, which cover Social Security and Medicare contributions. This is typically 15.3% on your net earnings up to a certain income threshold, then lower for Medicare. Unlike employees, who have these taxes withheld by their employer, sole proprietors must pay both the employer and employee portions. This often requires making estimated tax payments throughout the year to the IRS. The simplicity of sole proprietor taxes can be appealing, especially for smaller ventures. Less complex accounting and fewer forms to manage mean more time focused on the core business activities and growth strategies. Now, let's explore LLC taxation. By default, the IRS treats a single-member LLC, SMLLC, just like a sole proprietorship for tax purposes. This is known as pass-through taxation. This means the LLC itself does not pay corporate income tax. Instead, the profits and losses pass through to the owner's personal tax return, just like a sole proprietorship. You'd still use Schedule C. For multi-member LLCs, the default tax treatment is as a partnership. This also involves pass-through taxation, with each member reporting their share of profits and losses on their individual tax returns. However, here's where LLCs offer a powerful advantage: flexibility. An LLC can elect to be taxed as an S corporation or even a C corporation. This can significantly impact your tax strategy, especially for growth. Electing S Corp status can sometimes reduce your self-employment tax burden. As an S Corp, you can pay yourself a reasonable salary, subject to payroll taxes, and take remaining profits as distributions. These distributions are typically not subject to self-employment tax, potentially saving a substantial amount of money for higher-earning businesses. This strategy needs careful planning and professional advice. The year 2025 brings no radical changes to these core principles, but tax laws are dynamic. Staying informed about any minor adjustments or proposed legislation is always crucial for smart business decisions. Now, let's talk about fees. For a sole proprietorship, the fees are generally minimal. You might pay for a local business license or a doing business as DBA name, but no state filing fees for the structure itself. This low barrier to entry is another reason why many entrepreneurs start as sole proprietors. It allows them to validate their business concept without significant upfront investment in legal structures or compliance. For an LLC, there are certainly more fees involved. The first is the state filing fee to form the LLC, which can range from under $50 to several hundreds of dollars, depending on your state of formation. Many states also require annual or biennial report fees to keep your LLC in good standing. These fees can vary widely, from $20 to $500 or more per year, adding to the ongoing operational costs. You might also incur costs for a registered agent service, especially if you want privacy or don't have a physical address in the state where your LLC is formed. This is an additional recurring fee. While these fees are part of the cost of doing business as an LLC, they are typically a small price to pay for the significant legal protection and professional advantages that an LLC offers. It's an investment. The choice between a sole proprietor and an LLC often boils down to a pivotal question: when should you make the switch? There isn't a one-size-fits-all answer, but several indicators can guide your decision. One of the strongest signals to switch is when your business starts generating significant revenue or accumulating substantial assets. The more money and property involved, the greater the personal risk as a sole proprietor. Another key indicator is when you plan to hire employees. As an employer, you take on new liabilities, including potential workplace accidents, discrimination claims, or wage disputes. An LLC offers crucial protection. If your business involves a higher risk of lawsuits, such as providing professional services, selling physical products, or engaging with numerous clients, an LLC becomes almost essential. It's a proactive defense. Securing external funding or attracting investors often requires a more formal business structure. Lenders and investors prefer the credibility and defined ownership of an LLC, making it easier to grow your capital. Alex's craft business was thriving. They were considering expanding to wholesale, which meant larger contracts, more complex agreements, and greater potential exposure. The need for an LLC became undeniable. The decision to switch also depends on your state's specific laws and fees. Some states are more expensive or have stricter compliance requirements than others. Researching your state's regulations is paramount. Consulting with an experienced business attorney and a tax professional is highly recommended before making the switch. They can provide tailored advice based on your unique business situation and goals for 2025. These professionals can help you understand the long-term implications of forming an LLC, including tax elections, compliance requirements, and potential legal pitfalls. Their expertise is invaluable for informed choices. They can also assist with drafting your operating agreement, ensuring it properly reflects your business's structure and protects all members, if it's a multi-member LLC. This document is your internal roadmap. The process of switching from a sole proprietor to an LLC involves several steps. First, you'll need to choose a unique business name that complies with your state's naming conventions and is available. Next, you'll file your Articles of Organization with the Secretary of State. This officially registers your LLC with the state and gives it legal existence. It's the birth certificate of your new business entity. You'll need to obtain an Employer Identification Number, EIN, from the IRS, even if you don't plan to hire employees immediately. This is like a social security number for your business. Opening a dedicated business bank account is crucial. This helps maintain the legal separation between your personal and business finances, reinforcing the liability protection offered by the LLC structure. Remember to update all business contracts, licenses, and permits to reflect your new LLC status. Consistency across all your official documents is vital for legal compliance and avoiding confusion. Consider updating your business insurance policies as well. With an LLC, you might qualify for different types or levels of coverage, further enhancing your protection against various operational risks. The transition process, while requiring effort, is an investment in your business's future stability and growth. It's a strategic move that can provide long-term benefits and peace of mind for the entrepreneur. Let's revisit the tax perspective for 2025. While default LLC taxation resembles sole proprietorship, the S-Corp election remains a powerful tool for potential self-employment tax savings, particularly for profitable ventures. However, electing S-Corp status also brings additional administrative burdens, such as mandatory payroll for the owner's salary, separate tax filings, Form 1120-S, and stricter compliance requirements. It's a trade-off. The reasonable salary requirement for an S-Corp owner is critical. The IRS scrutinizes this to ensure owners aren't taking excessive distributions to avoid self-employment taxes. It must reflect industry standards. For smaller businesses with modest profits, the administrative overhead of an S-Corp might outweigh the tax savings. In such cases, the default pass-through taxation as an LLC is often the simpler, more efficient choice. Keep in mind that state taxes can also vary. Some states impose specific LLC taxes or fees, sometimes called franchise taxes or annual minimum taxes, irrespective of profit. Factor these into your financial planning. Returning to Alex, the decision was becoming clearer. Their increasing revenue, hiring plans, and a new line of potentially litigious products made the personal liability protection of an LLC non-negotiable. They consulted with a local business attorney who helped them navigate the state-specific filing process and drafted a robust operating agreement. This made the transition smooth and legally sound. Simultaneously, their tax advisor helped them understand the implications of default LLC taxation versus an S-Corp election for their anticipated 2025 income. They made an informed choice based on projections. Alex appreciated that while there were initial costs and ongoing fees, the peace of mind and enhanced professionalism outweighed them. It was an investment in the long-term viability of their growing enterprise. The transition also streamlined their bookkeeping. Having a separate business bank account and clearer expense tracking made tax season much less stressful. Organization improved significantly. For future business growth, the LLC structure offered more flexibility. It would be easier to add new partners, raise capital, or even sell the business down the line compared to a sole proprietorship. This enhanced flexibility is particularly valuable in a dynamic business environment like 2025, where agility and adaptability are key to sustained success. An LLC is a more robust foundation. What if your business is still very small and low risk? Starting as a sole proprietor can still be the most practical choice. It allows you to test the waters without much bureaucratic entanglement. Many successful businesses began as sole proprietorships and transitioned later. There's no shame in starting simple. The key is to recognize when your business has outgrown that initial structure. The when to switch decision is not about a specific revenue threshold, but rather a combination of revenue, assets, risk exposure, and growth plans. It's a holistic assessment tailored to your situation. Always be proactive in evaluating your business structure. A yearly review, perhaps during tax planning, is a good habit. Ask yourself if your current structure still serves your needs and minimizes risks effectively. Some entrepreneurs choose to form an LLC even with minimal risk, simply for the enhanced professionalism and perceived credibility. It can give a psychological boost to both the owner and their clients. Consider the industry you're in. Certain industries inherently carry higher risks, making an LLC a more immediate necessity. For example, a construction company versus a freelance writer. The legal and tax landscape for businesses, while generally stable for 2025, can evolve. Staying abreast of federal and state legislative changes is part of responsible business ownership, regardless of structure. The COVID-19 pandemic, for instance, highlighted the importance of robust business structures. Those with LLCs often found navigating loans and aid programs slightly easier due to their formalized status. While an LLC offers significant liability protection, it's not foolproof. You must still operate your LLC properly, maintaining separate finances, holding annual meetings, if required, and avoiding commingling assets. Failing to adhere to these corporate formalities can lead to piercing the corporate veil, where a court might hold you personally liable despite having an LLC. Strict compliance is key to protection. Therefore, even with an LLC, ongoing education about best practices for maintaining your business entity is essential. It's not a set-it-and-forget-it solution, it requires diligence and attention to detail. Alex, now operating as Alex's Creations LLC, felt a renewed sense of confidence. The legal shield allowed them to focus on innovation and expansion, knowing their personal future was secure. They continued to consult their accountant for optimal tax strategies and their attorney for any contractual needs. This professional team became an invaluable part of their business's success story. In conclusion, the choice between a sole proprietor and an LLC in 2025 isn't about one being inherently better. It's about aligning your business structure with your current needs, risk tolerance, and future aspirations. Start simple if that suits your venture, but always keep an eye on your growth and increasing exposure. The point of transition will become clear as your business matures and expands its operations. Remember the key takeaways: sole proprietor offers simplicity and low cost, but lacks personal liability protection. LLC provides liability shield and tax flexibility, but comes with more fees and administration. The year 2025 emphasizes ongoing vigilance regarding economic shifts and legislative updates. While core principles remain, a forward-thinking entrepreneur adapts to the evolving landscape for sustained advantage. Your business journey is unique. Empower yourself with knowledge, seek expert guidance, and make informed decisions that safeguard your hard work and propel your entrepreneurial dreams forward. Don't delay the conversation with a professional. Waiting too long to switch from a sole proprietor to an LLC could expose you to unnecessary risks that might have been easily mitigated with timely action. Consider the costs of inaction versus the costs of proactive change. A small investment in LLC formation and ongoing compliance can save you significantly more in potential legal fees or lost personal assets. An LLC can also simplify bringing on co-founders or partners in the future. Defined ownership stakes and operating agreements make these transitions smoother and more legally robust. The credibility an LLC lends can also open doors to better vendor relationships and more favorable terms. Larger companies often prefer dealing with legally distinct entities, reducing their own risk. Even if your business doesn't seem risky, consider unexpected events. A simple product malfunction or a service dispute could escalate, making that liability shield invaluable when you least expect it. For Alex, the LLC allowed their creative passion to flourish without constant worry about potential pitfalls. The structure provided a secure framework for sustained innovation and business expansion. They eventually hired their first employee, confident that their business structure protected their personal assets from any employment-related liabilities. This was a huge milestone for them. The transition process, while it had steps, was manageable with the right guidance. Alex realized it wasn't nearly as intimidating as they initially imagined, especially with professional help. Their advice to fellow entrepreneurs? Educate yourself thoroughly. Understand the implications of each structure, not just the perceived benefits. Knowledge is your most powerful tool in business. Secondly, don't be afraid to invest in professional advice. The fees for an attorney or accountant are often significantly less than the potential costs of making uninformed structural or tax decisions. The landscape of business ownership in 2025 is rich with opportunities. Choosing the right legal framework empowers you to seize those opportunities with confidence and security. Whether you remain a sole proprietor or transition to an LLC, make choices that align with your vision. Your business structure should support your dreams, not hinder them with unnecessary risk or complexity. The narrative of your business is yours to write. By understanding these fundamental differences, you gain control over your financial destiny and your personal protection in the entrepreneurial world. Remember the evolution: from a simple idea to a thriving venture, the business structure often needs to evolve alongside it. What worked perfectly at launch might not be suitable for expansion. Ultimately, a well-chosen business structure provides a sturdy foundation. It's the silent protector, allowing you to focus on what you do best: innovating, serving customers, and building your legacy. Alex's Creations LLC continued to grow, expanding its product lines and reaching new markets. The decision made in 2025 proved to be a pivotal moment, securing their future and enabling their dreams. Their story serves as a testament to the importance of proactive planning. The peace of mind gained was immeasurable, allowing creativity to flow without the constant shadow of personal risk. Whether you're just starting or looking to scale, remember to periodically assess your business structure. The right choice today might be different tomorrow, and that's perfectly normal. The entrepreneurial spirit thrives on innovation and resilience. Protecting that spirit with the appropriate legal framework ensures longevity and allows you to enjoy the fruits of your labor securely. So, as you navigate your business journey in 2025 and beyond, make the informed choice. LLC or sole proprietor, your business, your protection, your future. Choose wisely.